What's up, guys? Welcome back to Creating Cashflow, where today we are going to be going over here.co. We have finally got some earnings, the first earnings payout from here.co ever. And so we got paid out, which is a huge plus. We're going to start with doing a quick overview of here.co and my history with here.co up until this point. Then we're going to talk about total dividends paid out based on Q4 of 2022. Those just came in about a week ago in February. And finally, I'm just going to share my screen and drive you around my here.co account. And so you can see exactly how it looks if you were to invest in here.co, and also just to show you that the earnings were real. So before we jump into it, I would really appreciate if you smash that like button and or subscribe so you can follow my journey. On this channel, I share everything I learn about personal finance and investing. I try and share that with you in a simple, digestible way that hopefully makes sense and creates a community and a conversation. So if you have any questions about anything I say, go ahead and put it in the comments down below. I'll be super active and be sure to respond. Okay, so jumping into it, I'll take a quick second just to show you a little bit about here.co, give you a background and tell you why I invested. So basically, here.co is a place where you can invest in vacation rentals like stocks. Essentially, you can go and put your money into a home that they're trying to buy or that they're refurnishing and just doing a full, beautiful revamp of the home that then they manage, they put it on Airbnb. You don't have to do anything. So truly like the stock market, where you just go buy a stock and the business is just running in the background for the business benefit and also for your benefit. And then you just collect the dividend paychecks that come from that. A few of the reasons why I invested in here.co. One, I was just intrigued by the idea. I wanted to get into the short-term rental game, but I didn't want to have to foot a $60,000 down payment or potentially a larger down payment. I didn't want to have to deal with all of the management. I have a full-time job and I wasn't ready to take on all of the risk associated with buying a short-term rental home. And so I'm really trying to learn the market and hopefully learn from somebody else that understands this a bit better. And so that's when I came across here.co. And what's cool about them is they basically put homes onto their platform that then you can buy into. So like I mentioned earlier, you just buy into the home and you don't have to do anything else. Take care of finding a good location, the property management, they take care of designing the interior of the home, they take care of the Airbnb listing, they take care of all of that. And I really liked that the homes that they showed were really beautiful. Like, they were really well done, the design is awesome, and just the simplicity of it, I really wanted to get involved, and this is my first step into real estate. I think it's a good first step into real estate up until this point. And so I invested in 2 different homes, and we'll get to that later in the video where I will show you my account and how much I invested and the earnings from those investments. So about a week ago, I got this email here that says, Here has paid $42,623 in dividends to investors. We're excited to share that in Q4 of 2022, Here Properties paid out $42,623, resulting in an average annualized return of 4.3% on rental income and 3.95% in net average appreciation and an average total return of 7.91%. View the detailed performance of the Here portfolio of properties below. So in this email, we break down all of the Here properties, which are broken into active, partially active, and onboarding. An active property is a property that has finished onboarding and been live on booking platforms and available for guest stays for the entire duration of the reporting period, which basically just means that all of Q4, these properties were accepting bookings. So Sunburst, Enchantment, and Mendocino were all active for all of Q4, resulting in a 10.38% return at Sunburst, 2.61% return at Enchantment, and 1.4% at Mendocino. So partially active, as you can imagine, I also looked that up on the Here website. That means it was active during part of Q4. So part of the payout period, in this case it was Q4, these properties were active. So Moonridge was partially active, Hacienda, Tanglewood, and Avenida, resulting in Moonridge with a 3.1% return, Hacienda 5.13% return, Tanglewood 2.24%, and Avenida 5.19%, which gave an average rental dividend of 3.92. And they have a number of properties that we're onboarding. So in the next pay period, these properties that are onboarding now will probably move to partially active, and you get the whole funnel. It goes from onboarding to partially active to active. So the new properties that they are onboarding: Sabino, Terracotta, Snow Dancer, and Mountaineer. So both of my properties were in the partially active. I'm invested in Moonridge and Hacienda. So it's good to see these returns during a partially active period. And I'm excited to see what happens during a fully active period, because these returns aren't crazy, but they're definitely heading in a solid direction because these returns aren't crazy, especially Moonridge, that has a lower payout than what I would be earning in a high yield savings account right now. Currently, I have a high yield savings account with Ally that earns, I believe, 3.75%, and that's no risk at all. This, you're investing in a property, the upside should be higher than what you're getting at a high yield savings account. So with that, let's jump over and into my portfolio at here.co. So my initial total investment was $1,200. So I invested $1,000, which is the equivalent of 1,000 shares in Moonridge, which is in Southern California. And I invested only $200 into Hacienda, which is in Santa Fe. So let's look at Moonridge first. So based on rental income and my 1,000 shares, I had a $7.76 return, which is a 2% return. And then the appreciation, I lost money through appreciation for some reason. I don't understand that quite yet, and we'll be looking into it, making my total return for Moonridge $5.86. So they basically pay out quarterly, so I just got the Q4 payout in February, which means I'll get the Q1 payout in May, and so on. So now let's check out Hacienda, which you'll see that with rental income here, my payout was 2.51, which is a 4.28% payout. So only $2.51, which is not a ton, but that's a better return than I am getting in my high yield savings account, which is nice. It's also more than double than what I'm getting over here at Moonridge. And then appreciation is huge over here. So again, I don't understand how appreciation is being calculated right now, because usually appreciation is realized either when you buy a home or sell a home, depending on if you're the buyer or the seller, and the home value increasing or decreasing. But somehow appreciation is working in here, making my total return $10.27, which is an 18.31% return over here. So clearly I put my $1,000 into the wrong property, at least based on this first payout, because I only ended up investing $200 into Hacienda, again, which is the 200 shares, which then if you scroll up, you see the summary, which is rental income is $10.27. Appreciation is $5.86. Let's see if I can learn something here. It says our investment team uses third-party property value estimates to calculate the change in value of the underlying real estate. The value is added to the balance sheet, which factors in liabilities like the loan balance, accrued property taxes, and prorated initial cost. Appreciation will be unrealized until the property is sold. So that's where I get confused, because it says appreciation will be unrealized until the property is sold, but it's playing a part in my payout right now. So I'm not exactly sure, because that seems like it's being realized right now. And then my total return is just my rental income plus appreciation, which equals 16.13%, which is a 3.63%. So if you are wondering if you should be investing here or just keeping your money in a high yield index fund, I don't know, it kind of depends. I think I've been learning a lot from here as opposed to the money that I just have in a high yield index fund. The nice thing about that is I'm consistently getting paid out over there. There's no risk, my money's just sitting there. It has no chances of going down unless inflation just keeps going up. And in this, I'm getting a return. Potentially, I could be getting a bigger return. I'm extremely curious to see how well it will do over a full pay period. So if you haven't hit the subscribe button yet, please do so. I will be giving updates on this every time I get paid out. And also, it looks like there's a new home coming out, Hawthorne, Lake of the Ozarks. So I don't know when that's dropping, but this could potentially be interesting to put more money into. So with that, so far I've been extremely pleased with the communication from here. They're always letting us know when we get more bookings. They're always letting us know when we get 5-star reviews. And so the communication has been huge, which I find super helpful. And beyond that, it's nice to be in the short-term rental game, even if it's just kind of a toe in the water. And I definitely have a little bit more homework to do to find out more about why the appreciation is being realized, but it says it won't be realized for the next little bit. So anyway, thank you so much for watching. Go ahead and do me a favor, make today an incredible day, and remember that what you focus on grows. So focus on the things it's going to take to accomplish your goals and knock them out. See ya.